Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, January 31st, 2011. Well, folks, the markets have gone back to their same old, floating neutral to higher on extremely light volume. Friday was a cataclysmic event day where the markets collapsed down 166 points on the Dow. And again, this was all on the rioting in Egypt, the fear that the Suez Canal might be shut down or disrupted. And that's a major port, a major canal of transportation every which way all over the world, especially over the Mediterranean and that part of the world. So again, that would have been huge. It doesn't look like it's going to happen at this point, at least not now. If things get worse, watch out. The markets could collapse again, but right now it's on the back burner, and the markets have gone back to a down dollar, which means an up market, and the markets continue to float up on light volume. It's amazing how something so drastic can happen one day, then you have 2 days off over the weekend, and then everything comes back in standard form. The Federal Reserve has regained control of this market as they continue to try to keep it floating, to keep the economy up. And remember, the Fed has said the economy is directly tied to the stock market. Therefore, their analysis is pump enough money into the markets to keep it up. They can do that as long as the volume is light. If the volume is heavy like it was on Friday, they have to step back and let what happens happen. And you can see the results. Obviously, Friday, look at the drop here. I mean, massive drop. The markets close near the lows of the day. Today, volume returns light. People not so much worried about the whole Egyptian situation. Earnings are a distant memory from Ford on Friday or Amazon after the bell on Thursday, which was a result of Friday's drop on Amazon.com. And again, things back to normal. ExxonMobil had decent earnings this morning. Overall, take a look at that stock having a solid day higher. A good move, $1.50 higher as that stock continues to go higher. And again, good earnings. They beat on earnings and revenue. The one little small difference was their tax rate was a little bit lower than the market anticipated, which is usually bad because that helps earnings. Obviously, if they pay less taxes, more goes to earnings. And again, that's because there was a lot of overseas revenue. So analysts had anticipated a higher tax rate, and that's part of the reason why they beat, it looks like. But nonetheless, they were very, very solid earnings out there on Amazon.com. Chevron is following suit because those are sister companies. They go together. So therefore, Chevron is having a good up day. Chevron earnings last Friday came out, and they weren't nearly as good. They beat on earnings, but missed, I think, on revenue a little bit. The stock sold off when the market was dropping drastically on Friday, but today it's recovered the entire amount, and then some, hitting a high of 95. In fact, that's a new 52-week high at 95 on Chevron. Now, there are plays out there, but let's go back to the SPY. We'll discuss this all. By the way, fantastic webinar. Those of you that took it will be receiving our debut DVD for free in the mail over the next month or so. And again, for those that didn't, the DVD will be for sale over the next couple months on the website. But nonetheless, that was a key webinar, and again, amazing things. People have already said who took it that they're looking at the market in a whole new light and in a profitable sense, even more profitable than before. All right. Markets again, guys. You can see a small gap higher, a little bit of a pullback. There was actually an inverse head and shoulder pattern here that was actually very, very important in my book to watch for. Let me just draw this in on the chart because I do think it's that important that we all need to look. Here's your head and shoulder pattern, and again, I gave the target on this in the intraday stock chat, and there it is. Here's your neckline right here. When you break above the neckline, you're going to go to target. Target actually was right here at the white and green trend lines right here, and this is calculation based. Again, those of you that took the webinar will know, but otherwise you probably won't know because this, again, is stuff that we've calculated out. Nonetheless, beautiful inverse head and shoulders here. Inverse head and shoulders is bullish. Head and shoulder pattern is bearish. So again, this is an inverse, therefore it's bullish. Therefore, you can read when it takes out this level. Notice how the 50 also got taken out. The market's going to pop. It goes right to target. Now you're pulling back off target. Look for possible another move later today, maybe taking you up to the 200 moving average, which again would probably be the little more than 50% retrace, maybe possibly from Friday's fall. Possibly a 0.618 retrace. I'll have to calculate that out in the afternoon session in the intraday stock chat, but that would be good resistance at the 200 then. All right. 60-minute chart. Interesting how we got below here. We didn't quite get to the 200 moving average and then pop back. Futures were down about as much as 8 points yesterday evening and this morning before the market opened, but they have roared back. And again, as we see, the markets on light volume on a weak dollar are getting pushed up. In fact, let's go to the dollar chart here, flip it up. Take a look here, folks. This is where the dollar closed on Friday up here. Look at where it's trading today. Lower end of the range. Again, down solidly on the day, and that's propping the markets up. Remember, Friday when all this was going on, the fear overseas, people rush to safety. What's safe? Well, people, believe it or not, still view the dollar as being the safest currency out there. And it makes sense. I mean, even though the printing of the Fed is going on, all other countries are printing as well, or they're there's instability in those countries. For instance, the Middle East. For instance, Egypt and the northern African countries. So people rush to the dollar for safety. When you have a demand for dollars, the dollar price goes up. Therefore, the markets react in a negative sense because, again, it's inverse. So that's, again, market was falling on the dollar as that all was going on. Fear, earnings, we know Ford had earnings and so forth, and those all were catalysts to the downside on the market on Friday. But again, with the dollar down today, the market's free to float back higher on light volume. Federal Reserve POMO, permanent open market operations, continuing as they use that QE2 to prop the markets up by buying treasuries from banks and institutions, and the banks and institutions push the money into the market. All right, so that's really what we're seeing here. Let's take a look at a couple different plays that I am keeping an eye on. First of all, Caterpillar's having a good day today, although it's off the highs. Again, you're still looking at resistance at the pivot top from a couple days ago on earnings, which is right up here around this 97.70, 97.80 level. That will be a scalping opportunity in the afternoon session, so watch for that one. Let's take a look at NEM, Newmont Mining, up 22 cents, 21 cents. Low end of the chart here, really no chart there to be watchful of. Freeport-McMoRan, let's take a look at that, up $2.51. Again, nothing really that I'm seeing on that chart. Little small bull flag here off of a nice move up, solid consolidation, possibly setting up for a little bit of a move up this afternoon. And again, you could be making your way all the way, in theory, all the way up to this pivot top over the next day or so on that. I would not be surprised. Let's take a look at the GLD. GLD is now up 15 cents on the day after gapping lower. Again, GLD gapped lower today because there was a little less fear, but the weakness in the dollar is propelling gold back up. And again, you can see the big move on Friday on gold was a result of fear. Fear drives gold up, as does a weak dollar. So those two aspects can both be beneficial to gold. When the dollar is strong and there's no fear, then obviously gold will be at its weakest at that point. All right, makes sense. If you think about it, it makes sense. The USO, after a big day on Friday, is continuing. Look at this monster move today in the USO, just ripping up. Oil is continuing higher. In all fairness, people are still concerned about the Suez Canal. And again, all this instability is happening in Middle Eastern, Northern African countries, and they're all big or decent-sized oil producers. So that can be a very, very big issue here, and something that the market is definitely going to be on watch for because of. All right, and therefore oil premium is being built into the market. All right. Small cap wise, I am keeping an eye on some of the mineral stocks just out of curiosity. SHZ down here to the 50 moving average. I don't like it quite at the 50. I'd like it a little bit more of a downward move. That's Shenzhen Zhao Mining and Resources there. And again, we've always watched a couple of the other ones. XING here. That's come back off. Any sort of retrace, you want to get it to a good level. I really like the 50 moving average on this XING. If it gets there, that would be a nice little area. And CHGS at least appears to the 50, maybe even a little bit lower in this range would be ideal to really get it at a secure level where there's a little less risk involved in buying it on the long side. So I'm watching those. Those are on my watch list right now. Also on my watch list off of U.S. Steel. U.S. Steel having another big bounce day. U.S. Steel, again, last week until Friday really had a great up move. I am keeping an eye on some of the Chinese steel players. CPSL, a good pullback here into a good area of support down here. And these are just watch list plays. So again, utilize it properly. But again, if you want the hardcore plays, if you want the swing trades, if you want the money-making plays, you have to join the research center. But again, folks, as I always say, we now offer a free trial. So if you're a little unsure, take the free trial. See what it's all about. Decide for yourself after that if it's for you, if it's worth it, how you're doing overall, what you think, what you're being educated on, swing trades, and so forth, all right? And again, you can do the research center. You can do the chat room. It's there for the taking. And again, we encourage you to at least try it out with the free trial to get a good sense of what it is we do, how awesome we are, and again, the money that can be made here. All right, let's go back to the SPY and just take a quick look at the SPY. That's the daily chart. We're not going to focus on that. Remember, I do nightly videos in the Research Center, which is part of the Research Center. And again, those nightly videos are 30, 40 minutes in length. They're hardcore, going over daily charts of everything that we can think of that looks important. And again, that's key. That's just one part of the Research Center, plus hot charts and alerts, daily market report, pro trader watch list, technical tactic, you name it. It goes on and on and on, all inclusive for $49.99. And remember, with free trial. All right, in any case, market is consolidating here off of that nice move up into that conclusion of the inverse head and shoulders. After you pull back here, now you're starting to watch to see, okay, are you going to pop down to here? This will be major support down here. Or are you going to pop up here to the 200 moving average and break out to the upside? Volume is very, very light considering what type of day we saw on Friday of last week with almost 300 million in traded volume, even including the after-hour session. Today we've only done 79 million. It's going to be much lighter, probably around 140 to 150 is my guesstimate. All right, again, join the Research Center, join the chat room. I'll talk to you there tonight. Take care.